While the major averages fell on Friday amid attacks between Israel and Iran, investors did receive a dose of good news from the University of Michigan. The University of Michigan Consumer Sentiment Index's preliminary June reading came in at 60.5. That number far above the expectations from economists of 54. It also represents close to a 16% month-over-month increase, as well as the index's first uptick in 6 months. Very welcome news on the soft data front, and the person behind that report, Joanne, is the Director of Surveys of Consumers for the University of Michigan in Ann Arbor. Joanne joins me now. It's great to have you here. Good morning. Obviously, you know, Joanne, you don't need me to tell you, this is a market-moving survey. We eagerly look, and it's all part of an ongoing conversation between a bit of a divergence between the so-called hard data and the so-called soft data. For people who missed the release last week, talk us through the top takeaways this month.
We've been seeing a plunging of sentiment throughout 2025 in the wake of volatility in trade policy and the high announced tariffs. And in June, we saw the first pickup in sentiment in about 6 months. Consumers are feeling a little bit of relief with a bit of a slowdown with the gyrations in trade policy, but they don't think we're out of the woods yet. We're still 20% below where we were just 6 months ago in December after sentiment saw a post-election bump.
We are still about 20% below the December levels, like you just alluded to there. What is holding people back, you think, from that full-fledged kind of pre-Liberation Day level of confidence again?
Consumers don't believe that we're out of the woods. They don't see trade policy as completely stabilized yet. So they continue to be holding their breath about where trade policy is going to land. This is particularly concerning for consumers because the number one factor that's been on consumers' minds for the past several years has been purchasing power, cost of living, and prices. And they broadly believe that any tariffs that are imposed will be passed through to consumer prices. So consumers are bracing for that impact, even though the shock of Liberation Day has very much eased up a little bit. Consumers do not believe that policy has stabilized enough for them to really feel solid about the future.
Joanne, we've heard from FOMC policymakers that maybe at times they don't really take into account the so-called soft data, i.e. this crucial consumer sentiment survey from Ann Arbor as closely as some people think they should. What is your estimation about how FOMC policymakers, Jay Powell, his colleagues, go about looking at parts of the hard data as opposed to your survey?
Any policymaker worth their salt is going to be considering a whole suite of data, and that includes backwards-looking data, like what some people might call hard data, as well as forward-looking data like our own. And you would only look at one data point if they all agreed. So it should be no surprise that when data points don't necessarily agree, policymakers are going to be very careful about what they are weighing and when. And what we are showing very clearly is some downside risk where consumers broadly are expecting not only an increase in inflation, but also a slowdown in business conditions and a worsening in unemployment. And this month's improvement doesn't reverse that.
Yeah, Joanne, we saw pretty much every major group here, according to last week's report, age, income, party, all showing significant gains for the month. It's pretty broad improvement there across the board. What does that tell you?
This isn't just something that's being driven by one single group. Consumers are broadly in agreement that the risk from trade policy has eased up a bit. We had about 2/3 of consumers spontaneously mentioning comments about tariffs, and we're not asking questions about tariffs. So it's very loud and clear that this is what consumers are worried about, their impact on their prices, and we're seeing that across the board. And so I think that really strengthens the impact of our result. This is something that is a consensus across the U.S. population, is not being just driven by a small group in one corner.
Joanne, what I love about the report, it's not just present conditions, it is expectations for future business considerations. Really get a sense under the hood of what do you think is going to happen down the line. It did appear as if expectations also surged, and I wonder from where you're situated, do you see that as real optimism or just short-term relief?
I think it's too early to tell, particularly with the developments in the Middle East that we just saw in the middle on the day of our release. If that is something that passes through to consumers in the form of higher gas prices and higher prices, then consumers could feel very differently by the end of the month. At this time, I think they believe that their worst fears from March, April, May have not been realized, and so they feel some relief on that. But time will tell if this this upward momentum can continue, or if consumers are still really waiting for the other shoe to drop with respect to inflation.
Joanne, it still appears as if some big ticket spending might be somewhat on the sidelines for a lot of consumers. Do we have a sense of what's really stopping people from opening their wallets a bit more for those big ticket items?
One of the key things that we're seeing is that consumers are very worried about their incomes and labor markets in the year ahead. And this is one of the big differences from what we were seeing after the pandemic. So after the pandemic, consumer sentiment was very, very low, but consumers were willing to spend through that because labor markets were strong, their incomes were reliable, there were help wanted signs everywhere. And right now, labor markets are that's not what consumers see anymore. They are worried that we have about 2/3 of consumers worried that unemployment is going to rise in the year ahead. And on top of that, income expectations have also dropped. This is for consumers' own expectations for their own incomes. So they just don't have the confidence in their own incomes to open up their wallets and spend as freely as they had been before.
Joanne, this survey is highly touted. We watch it so closely every month that we're always on the edge of our seats for when it comes out. Thanks a lot for taking the time to help us better understand it. That's Joanne Shu, Director of the Surveys of Consumers for the University of Michigan, the one and only. Joanne, thanks a lot.